Well, Rana Gupta is now joining us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much. I just want to start with earnings and your assessment of India earnings so far. I think about 50% of the top, say, 200 companies have reported numbers so far. What's your sense? I think top-line growth has been about 7-8%. Operating profit growth has been around 10%. Will this lead to, or will the next 50% lead to any upgrades, or you think it's going to be a muted quarter for overall FY24 expectations?
Good morning. I think when the results are is done and dusted in another week or so, we would see not much change in the overall market EPS integer. But having said that, I think the results, you have to put that into context, because if you look at results of auto companies, result of bank companies, there we have seen very good results. And also numbers into upgrades, as opposed to, let's say, the external facing sector like IT, where there we have seen downgrades. So overall market EPS integer may not change much, but I think under the hood, there are a lot of sectoral shifts that are happening. So we would more focus on the underlying sectoral shifts than the overall market EPS growth.
Got it. Another thing that's really improved for a market like India is the fund flows. I mean, it's been 9 straight days of solid FII buying that has come into the market. What has changed? Is it that India has gotten a bit more attractive as far as valuations are concerned, or is growth picking up? And how are you positioned on the Indian markets now?
We have been saying that India looks quite good within the emerging markets, and emerging market complex as such looks good because US dollar looks like it's peaking, interest rates, the peak is in sight, and energy prices are lower. That is typically good for emerging markets, and within emerging markets, I think India also looks well because of the reforms that have happened, digitization, and manufacturing. We have spoken that for a long time. Now, of course, from point to point, people notice that and deploy money. And if you're asking me that what the catalyst was for this round of inflows, we would imagine that some of the FIs, they were a bit concerned on the current account. But I think the current account worries, whatever there were, now is also considerably diminished post we saw that tremendous service export numbers, right? So basically, I think that theme that we have been talking about for some time, that fiscal deficit coming down under control, current account deficit improving. So overall, in the economy, deficit is improving, and the savings deficits are improving, the deficits are going down, and the savings are improving. I think that theme is now playing out in data that might have catalyzed more investments from the FII investors into Indian markets.
For how long do you think this divergence can last? I mean, sometime last October, we saw the Indian markets decouple from global markets, did extremely well, only to come back and begin underperforming for the first 3 months of this year. And now we're back again outperforming the global indices. How long do you think this lasts?
Well, I think if you look at, even take a step back and take a view and talk about Indian markets first, I think Indian markets are broadly in the range of 16,500 to broadly 18,500 for what's going to be nearly 2 years now. Now, of course, that range is a good to, excites few people, but I think nothing significant has happened for the Indian market to right now break out of the range. I think breaking out of the range will have to wait for some time. We don't see it happening before the second half of this year. So I think near term, some more consolidation. And as you rightly pointed out, Indian markets have outperformed the rest of the emerging markets, even some of the global markets, since about beginning of April. I think that's about 7-8% of, whereas the emerging markets have done mostly not much. It has, how far it will run, when it will stop, it's hard to say. But I would just think that Indian markets is right now is pushing towards the top end of the range. So we would expect some more consolidation around here.
Rana, the bigger kind of overlay is that maybe rates have hopefully peaked, not just here in India, but around the world as well. And that is helpful for PE multiples. Generally speaking, whatever else may be happening under the surface in terms of earnings and everything else. Is that going to be a help in a big way, in your opinion, across sectors, especially expensive sectors here in India?
Yes, I mean, that's really the tricky one, because obviously markets are trading on the basis of the rates will be cut. If you look at all the forward-looking expectations in the US, market is pricing in about 3 to 4 rate cuts by February of 2024. Now, Whether that's going to happen or not, that we'll have to wait and see. Now, given the way the inflation data is still panning out, 4.5%, still much above the 2% rate, the odds are that the economy is still quite resilient. The odds are that inflation continues to remain a bit on the higher side. And if market does not get the 3 or 4 rate cuts that is a price 10, I think till that time, I think it is safer to stay away from the very high PE stocks. In any case, within India, the high PE stocks are mostly in the consumer durable and the retail space. That's one area where we are, from a stock perspective, we are a bit cautious. We would rather play the auto ancillary, the banking, the industrials, and the real estate side.
Okay, when you think about it like that, it has been a really painful period, right, for the market. This range of 16,500 to 18,500 for 2 whole years. Perhaps this could be the year where we break out of that range. Rana, thanks a lot for stopping by and speaking to CNBC-TV18. Appreciate your thoughts this morning. Well, that's the word coming in on the global markets and, of course, India. The views are bullish. Let's slip into a quick break. On the other side of the break, we have our entire team joining in this morning to help us with all the top stocks that you need to watch out for.